Okay, today starts payroll. Everyone has probably been involved with payroll in some form or another, either paying someone or receiving payment for services rendered. So what we're going to learn today is how a business tracks payroll. Not how they record it yet, we'll learn that in the next chapter, but how we look at computing wages and or salaries, some of the laws regarding them, and then deductions for those employees, along with payroll taxes that have to be paid by the employer. So, first of all, we have someone called employees who work under the supervision of someone for your business, and they are paid for the work that they provide for that business. Now, requirements for employees, they must fill out something called a W-4. What is a W-4? Right, it indicates, first of all, their marital status, Social Security number, address, etc. It also includes the exemptions that they're going to claim. This is required for all employees. So if you have a business and employees that you have hired, you must have them fill out all of these things. One thing I will tell you about for the purposes of this class, and that is this. The chapters in 7 and 8 talk about payroll forms, quarterly reports, etc. You will not be responsible for filling out any payroll forms like the 941, etc. Those are included in the chapter, but they're covered in more depth in our payroll class. So you'll just know how to figure payroll, how to complete registers, and how to journalize, but you won't have to do the federal forms. Is that clear? So every time you see that and think, oh, I have to do that, you do not. It's also included on our next mini practice set, but we have deleted that part of it. So you will not have to do the form on your mini practice set. So if you work ahead, you do not have to do that form. Now, how do employees differ from independent contractors? How do employees differ from independent contractors?
Because independent contractors have to pay for their own taxes, have to pay their own Social Security.
Good.
Have to pay their own.
Good. Independent contractors receive money for their services, but they're not an employee of the business. So therefore, they have to pay all their own taxes. They have to pay them by filing their tax returns. So you're not going to withdraw it from their salary. They're totally responsible. And again, they receive a different form at the end of the year from you. What do we receive when we receive earnings from a business at the end of the year? W-2s. Anyone know what an independent contractor will receive?
1099.
Good. A 1099. Again, these are forms that the businesses will have to issue to both its employees and independent contractors. Now, FLSA, Fair Labor Standards Act, guides the rules for employees. One of them is the rules regarding overtime. What is overtime?
It depends on what state you're in, but normally it's anything over 40 hours.
Good. Normally we think of overtime as anything over 40 hours per week. However, that could be different from state to state. So for examples, in some states, overtime is anything over 40 hours per week. In others, anything over 8 hours per day. So it's possible not to work 8 hours every day, but work one day more than 8, and you would still get overtime in some states for those hours worked over 8 hours, in other states not. So you need to be aware of the laws regarding payroll, depending on where you live. What about salaried employees? salaried employees.
They don't get overtime.
They can get overtime, but usually salaried means you get a specific amount of pay per pay period. Could be per month, twice a month, every week, every 2 weeks, however. And whether you work 40, 50, 60, you get paid the same. Advantages to being a salaried employee. Okay? Advantages are maybe your job requires less than 40 hours this week. So that's what you're going to put in. It is possible. Disadvantages would be the opposite. Maybe your job requires 60 hours this week. Because you're salaried, you're going to work it. Derek? Usually, salaried might make a higher rate of pay, yes. And do people want to be salaried, or would they rather be hourly? What would you think? Everyone's different on that. Depends on your needs. Some people like the security of knowing how much they're going to get every single payday. Others like that opportunity to maybe make more during certain times, and they like to be hourly. But again, everyone is set up differently. So we're going to treat them both very similarly for this class, but do be aware that salaried is different from hourly. Payroll process. So for the business, what you're going to learn to do is calculate something called gross wages. And what are gross wages?
Wages before your deduction.
Yes, it's the amount of money that you actually earn from performing whatever work you do for the business. So for example, if I receive a salary of $2,000 per month, that is my gross wages, $2,000. Do I actually receive $2,000? Not even close. Because of something called deductions. And we're going to go over those very soon. So right now, gross wages is the amount you're actually paid before any deductions. How is that computed? For salaried, it's easy. It's given. It's a flat amount per pay period. How about for hourly?
Your amount of pay times the amount of hours that you work.
Good. You take the amount of hours you work times your rate of pay. How does overtime play into that? Good. Somebody says time and a half for overtime. Is that true? Could be. For most companies, time and a half is overtime. Some companies, however, pay even more for things like holidays. Could be double time, even triple time. Some people pay double or more for Sundays. Others, it's just part of their normal work week. So every place is going to be possibly different. So you have to know the rules for that state and or company. Okay, what happens when you make a lot more money through overtime?
You lose it all in deductions.
You get jumped up in your tax bracket, so you get more deductions. So it's possible to literally make a higher gross wage for a certain pay period, but yet take home less than you did making a lower amount. Yes, we love that one. Again, the 941, this shows to be compiled by the Business Quarterly, you will not have to do. You can read about it, know what it is, but you will not have to fill out this form. Again, it's done in our payroll class. A W-3 is actually just a transmittal form that is sent from the business to the government along with copies of all the W-2s. So when W-2s are processed at the end of the year and sent to all the employees, who also gets a copy of that? Yeah, The government. So even though when you file your tax returns, you have to include a copy with your federal return, they already know what it is. So it's just a check to make sure you're claiming what's already known. Do you have to keep track of whether that is correct or not? Anybody ever have an incorrect W-2? Yes. So do watch it to make sure that your W-2s are accurate. Kind of pay attention as the year goes on to make sure that that amount is correctly documented. Because if not, whatever they report to the IRS, they expect you to pay taxes on. Okay? Now, after you calculate payroll, you're going to fill out things, and we're going to show you how to do these here in a few minutes, called a payroll register, which includes your employees, their hours worked, their taxable earnings, their deductions, and their net pay. And you're also going to learn to fill out something called an employee earnings record. Shows what each employee earns. Each employee earns. So every employee could earn a different amount. Once this is processed on these forms, the business has to show it in their financial records. And how can it show it? We need to journalize payroll just like we do everything else. So that's going to be on Thursday. We're going to learn to journalize payroll. Now we're just going to learn how to compute payroll and deductions to arrive at something called net pay. And of course, after you journalize, what's the next step? Posting to the general ledger to update those accounts. Okay? Now, since we've talked a bit about wages and salaries, what kind of things are deducted from your wages? First of all, we have some required items. The federal government likes to take its first. So let's talk about that one first. Income tax, federal income tax, often called FIT, F-I-T. So when you see FIT, that's federal income tax. What is your federal income tax based on? Your marital status, how much you earn, and your exemptions that you've claimed. Your exemptions include yourself, if you have a spouse, and if you have any dependents, any children. So that will all get deducted from your paycheck. Again, the W-4 form is what you fill out to show what that deduction will be. How does the employer determine how much to take out then? They look at the W-4, there's a tax chart that goes with it, and then that is how much is taken out from every paycheck. Now, if you look on page 261 in your book, you'll see an example of that, but we're going to refer back to that here in a minute. But there's an example of a tax chart on page 261. Now, state income tax. Do we have a state income tax?
Yes.
Yes, we do. A neighboring state, Washington, does not. So, a lot of states base their taxes on a certain percentage. So for the purposes of this class, the state taxes will normally be given to you. So they'll tell you how much this person has to pay for state tax. It's often abbreviated SIT for state income tax. So just for your information, SIT is state income tax. Now, this one could get a little confusing to you because it's been called different things in the past, and you may refer to it as something different. Some of these are synonymous, and I'm going to indicate what they are. A deduction from every employee is something called Social Security tax, which now is broken down into OASDI and Medicare. You'll see both of those as deductions on your check. OESDI is Old Age Survivors and Disability Insurance, and it's based on a percentage of what you earn. Now, I have to tell you that some information in your book is not up to date. So for the purposes of your assignments, you're going to follow the rates given in your book. But I'm also going to give you some information regarding what is current. So for example, for Social Security tax, or OESDI, we have to pay how much out of our paycheck? What rate? Anybody know? It's not, luckily. Effective January 1st, it was reduced. First time in as long as I can remember. It is currently at 4.2%. Your book will tell you 6.2% because that's the way it's been forever. 6.2% gets taken out from your paycheck for FICA OESDI. Now, there is a limit. Once you reach earnings of, according to the book, $102,000, but in real life, $106,800, you no longer have to pay for that year into OESDI or Social Security. So think about it. Once you make over $106,800 a year, then you stop paying into Social Security. You're like, yeah. Some people question that because the people that make a lot are only paying up to a certain amount. So they question how fair that is. Now, the other insurance through this system is called Medicare. It's your health or hospitalization insurance, and that rate is this, 1.45% of your wages is deducted for Medicare. 1.45%, no limit. So if you make $4 million this year, you pay in 1.45% of it into Medicare, and you do not get that back. That just gets put into the fund to provide that insurance for people who later retire. Okay? And again, the base for real life is 1,068, but for the purposes of the book, it's 102. So you're always going to use that cap of 102 for your assignments. Otherwise, the amounts will be incorrect. Now, up until this year, the amount withdrawn for Social Security tax was 6.2%. So it was reduced 2% this year. Now, how long that's going to last, I don't know. But the idea was to put more money into the pockets of the American workers by reducing their tax liability a little bit. Okay, other withholdings from your check. We have federal income tax, we have state income tax, we have Social Security tax, which is FICA OESDI, we have FICA Medicare. What else do you have deducted from your check? Insurance. Insurance premiums, if you're responsible for any of them. And most companies do charge you something now. What else? Good. Retirement plans that you voluntarily have deductions for. What else? Yeah, most companies will pay for that. Some will charge you a small amount. Some, if you're a union worker, you may have union dues deducted from your paycheck. If you've opted for things like savings bonds deductions, what else? You could have money taking out going directly into a savings account outside of a retirement account. Those are all deductions. Anything else you can think of that would be a deduction from your paycheck? Could be charities. Maybe you're doing a United Way contribution. Those would be deducted automatically, and then you can choose to withhold additional amounts for your taxes. Why would someone want to do that?
To make sure they don't have to pay taxes at the end.
Yes, maybe every time they file their tax return they have to pay, and they're tired of having to come up with that money at the end of the year, so they have an additional amount taken from each paycheck. It kind of makes it easier at the end of the year when you file your tax return if you don't have to pay that big amount. Others say absolutely not. I'd rather have the money and gain interest on it now than have the government gaining interest on my money. Not that we're gaining much interest on our money right now. Okay, anything else you can think of that's deducted from your check? Yeah, unfortunately. Some people have garnishments, something that's been mandated that be deducted from your check because of, usually due to lack of payment in some form or another. Sometimes child support, depending on the state, is mandatory, so that's deducted from your check. So we have our gross wages minus all our deductions, and what do we end up with?
Net pay.
Net pay. And what is that net pay? That's the amount that the company cuts a check to you for. So that net pay is the amount you actually get to have deposited in your account or can cash if you get a check from the business. Okay? Any questions on those withholdings? Those are employee withholdings or deductions from employee payroll.